In a couple of months, 5 major UK tax changes are going to hit UK businesses. Dividend tax up, capital gain tax up, VCT relief down. I'm Mustafa, I'm an accountant, and if you run a business or invest, these changes are going to make big differences for you. Here's what's coming up and what to do now. Okay, so April the 6th, 2026. That's when it all changes. Most business owners, they've got no idea that this is coming up. They're going to file their 25-26 tax return in January 2027 and wonder why their tax bill is £3,000 higher than what it was last year. The time to act is now, before April the 6th. Let me break down exactly what's changing and what you can do about it as well. Firstly, dividend tax is going up. If you run a limited company and you take out dividends personally, you're about to pay a little bit more. The current rates up until April the 5th, 2026 are the basic rate is going to be at 8.75%, higher rate is 33.75%, and the additional rate is 39.35%. Now here's where it changes. The new rates, the basic rate is 10.75%, so that's up 2%. The higher rate, 35.75%, up again 2%. The additional rate, that's unchanged. So it doesn't sound like much, does it? Just 2%. But let me show you what that's actually going to cost you, because that's probably all you care about, right? So say you take 30,000 dividends after the £500 allowance. At the old rate, you'll only be paying £2,625 in dividend tax. But at the new rate, you're going to pay £3,225. That's an extra cost of £600 and nothing has changed. Now let's say you were a higher rate taxpayer taking dividends and say you took £50,000. At the old rate, you'd be paying £16,875 in dividend tax. But at the new rate, you're going to pay £17,875. Now that's an extra cost of £1,000 every single year. Do the math. So what you can do now is, if you're planning to take dividends anyways, take them before these changes. Declare them in the current tax year. And look, this only works if your company's got profits to support this and you don't actually need that cash. But let's say you were going to take 30,000 anyways, time it right and do it before the tax hikes. Now secondly, if you're selling a business, CGT rates are about to go up. In the UK, we've got a relief called the Business Asset Disposal Relief, formerly called the Entrepreneur's Relief. This gives you a lower CGT rate when you sell your whole business. So the current rate is 14%. But that's going to go up to 18%. That's a further 4%. So let's look at that on a £1 million gain. So let's say you sold your business and your gain was 1 million. At the old rate, you'd be paying £140,000 tax. Now on the new rate, you're paying £180,000 in tax. That's a 40,000 increase. And that's on the exact same sale. Nothing's changed, just the tax rates. So here's what you can do now to try and avoid that. If you're going to sell your business anyways, try and sell it before April. Sell it at a reduced rate. But here's the catch. If you're going to do this, make sure everything is complete before the April the 6th. It can't be a lingering sale. It's got to be done and dusted out of the way. So yeah, if you're even thinking about selling, start the conversations now, get the ball rolling and make sure it's all done. Because once the April the 6th hits, you're going to be paying 18%. And I don't think you want that. Now the Venture Capital Trust Relief is being cut, shortly known as VCT. VCTs let you invest in small UK businesses and allow you to get a little bit of tax relief up front. The current relief was 30%, but now that's changing 10% down to 20%. So on the old relief, say you invested £50,000, you would have got back £15,000 in just tax relief. And with the new rates, that's only going to be £10,000. So £5,000 less in tax relief. So if you were going to plan to invest in VCTs anyways, just try and do them a little bit earlier. Get into it. Because I know if I had significant income to offset and I understood all the risks in investing in VCTs and I was comfortable in locking away my money for a few years, I definitely want to do that before the reliefs decrease. So yeah, don't just invest in VCTs just for the tax relief. Invest because you want to help UK businesses and fund smaller businesses. And look, if you're watching this thinking I need to act on one of these changes and you don't know how, book in a call with me. The link is in the description. We'll map out everything, we'll make a plan for you, tailored to you, and make sure that you're paying the least amount of tax and you're also optimizing everything in your reach. There's no pressure on this call, just clarity. So let's go into a quick note on ISAs. There's a little bit of good news and some bad news as well. From April 2026 to April 2027, the allowance is going to stay the same. So you still get the £20,000 annual allowance. But the bad news is, from April 2027, that's going to drop down to £12,000. unless you're over 65. High chance you're not watching this video if you're over 65 anyways. So you've got one more year at that 20k limit, so make use out of it. So if you can, and you can comfortably put that money away, maximize your full allowance, use the full £20,000 and shelter it from tax, because once that allowance reduces to 12,000, that's £8,000 less every single year that you could shelter. Now this change, this is a big one, so listen up. From April the 6th, 2026, MTD for income tax is being introduced. If your business makes over £50,000, you must use Making Tax Digital. No ifs, no buts, you must use it. No more paper records, no more HMRC portal, and you've got to submit quarterly returns. And to do all of this, you're gonna need MTD compliant software. You're gonna need to keep digital records for absolutely everything. And like I said, you're gonna need to update HMRC quarterly. I've already done a full video on this, breaking it all down. Link is in the description, so make sure you give that a watch. But if you haven't started preparing still, you've not got long left. Here's what you should do now. First up, buy some accounting software. There's some free ones out there, there's some paid ones. Make your mind up, watch my video, and you'll have some sort of indication as to which ones to use. And start using it now. Yes, I know it's before April, but just start using it now so you get familiar. There's still a learning curve with all these softwares. And look, here's the truth. You can't avoid any of these changes. None of us can. They're happening. They are gonna happen regardless of what you say or do. But what you can do is help minimize your exposure and minimize the damage by acting before deadlines. You can take your dividends early, you can sell your business early, you can start investing in businesses early. Or if you want, you can completely ignore all this and pay thousands more. I don't care. It's your choice at the end of the day. Most people, they'll do nothing. They'll wait till the deadline, they'll pay a little bit more, and they just won't care. Don't be most people. So if you're watching this and thinking that you need help figuring all this out, because it's complex, and I know that, you've got two options in front of you. Option one, you do it all yourself and you hope that you've done it all right. Or option two, you get someone who's done this countless of times. You get someone who knows what they're doing and is able to make you a plan, is able to direct you and guide you and give you opportunities to help save tax, minimize your exposure to tax as well, and also be a friend that you can talk to about tax, because I know it's a daunting subject. And look, we'll review all your changes. We'll work out a plan that helps you minimize the tax that's going to be hit the hardest and help you create an action plan for the next tax year. Because here's the reality. April is not far away. You've not got long left. And after that, you're going to be paying new rates. Click the link in the description and let's make sure that you're not overpaying on tax.